Good afternoon, everyone who's joined. We're just waiting for a few more participants to join us for this afternoon's webinar. Thank you very much for joining. Our speakers for the afternoon are online. You should be able to see them on your video. So we're just going to give it just a few more minutes and then we'll start. Okay, it's now exactly 4 o'clock. So I can see we've got about 19 participants who've joined. A lot more people have registered to join. So thank you very much for those who were prompt on this webinar. This is our first webinar under the COVID-19 for WEConnect International in South Africa. Thank you for everybody who's joined us for the afternoon. WEConnect International is a global organization that identifies, registers, and certifies women-owned businesses. The key criteria is that the women-owned business must be at least minimum 51% owned, managed, and controlled by women. We then introduce the network of women business owners to our corporate members. Globally, we currently have just over 100 global members who are corporate, the majority of whom are American corporates. And a lot of you know the big names. And of course, within those big names, it includes EY. And we're delighted that EY came on board with us. And we've got a presenter, a partner from EY who's going to be presenting this afternoon. I just need to make an apology for one of the people you had on your invite, for your Lisa, who was going to join us as one of the legal experts. She has a very exciting opportunity that's opening up in her life. And unfortunately, the discussion with the global partners happened at the same time as this call. So we wish Yolisa well. The two experts we've got on board, I know, will give us the information that we need for this afternoon. I'm now going to hand over to Marguerite, Marguerite Greef, who is one of our women business owners within the network, who will then introduce you to our speaker for the day. Over to you, Marguerite.
Good afternoon, everybody. My name is Marguerite Greef. I am the Managing Director of Greef Attorneys. It's a pleasure to be assisting Vedika Andhee today with this webinar. We are an all-women law firm. We have offices in Pretoria and Cape Town, and we specialize in commercial law and estate planning and property law. So over to Vedika Andhee.
Hello, everyone. Okay, I hope everyone can hear me clearly. As introduced, my name is Vedika. I work in people advisory services within Ernst & Young. And some of the things we look at is items that affect employers and employees. And in the last couple of days, it's really been a brilliant journey for us because there's been lots of new legislation that's come up. And we're looking at things that are, I would argue, high up in the minds of a lot of corporates today. So what my intention is to run through a few items as was indicated in the agenda. If you have any questions, you're welcome to just type it through, and I'm sure Marguerite and Jean will just convey them to me. As you can see, I'm sitting at home, and the intention here is I'm going to go through a few slides Although we've put out specific topics that we were going to discuss, I've tried to plan this presentation such that it has a more practical implication, or you will get a better understanding of it based on various scenarios. So I guess the first thing I want to say is that when we started this journey and we were seeing what was happening overseas, we all thought that it will come to South Africa at some stage, and all of a sudden we had an announcement from the president which said that we're on 21 days lockdown. And for companies that are not used to working remotely, this became quite a difficult time for them, because they were faced with workforces that A, were not necessarily essential services and therefore could not carry on with their work, and B, employees that were not set up remotely and could not then continue their work at home. And C, those that were in the service industry where you're used to having client interaction. You're talking about hotels here, potentially restaurants, etc., where if there's no client, you can't make money, and therefore it became extremely difficult for those whose employees were largely on the front line and client serving. So today what I want to talk to you about is the impact from a compensation perspective on all these different categories of employees, and more importantly, to challenge you to find out whether you have a plan B or a plan C, okay? Currently, so as we go through these slides, how you read them is you read them from the top to the bottom, just down the various columns. So we will talk about various scenarios. Perhaps one of the more common ones at the moment, the ones that are hitting the media, in fact, is the temporary layoff. Now, just to put some context on this, a temporary layoff is an instance where the business is shut down as a direct result of COVID-19. The employees are told, guys, go home. Sorry, we can't pay you during this time. And after the lockdown, when the business opens, the employee still has a job and would then go back to work. Now, the difficulty that comes into play here is that these employees who are used to receiving money all of a sudden don't have money for a specific period of time. This might be for 21 days, or it may be 21 days plus 1 month, or 21 days plus 2 months. So however long this period is where the business cannot be open. Now, there's been quite a bit of discussion in the media around this thing called the temporary employee relief that's available. And what I'd like to talk about now is just very briefly what this is all about and how you can claim. So firstly, it's important that we realize that ideally the employer should be the one who's claiming this, because employees do not have the infrastructure, especially in instances like now, where the UIF, which is the administrating body for TERS, is only accepting email and online applications. So ideally, the employer should be the one who is lodging these applications and providing the information through to the UIF via the two mechanisms. The important thing to bear in mind here is that as an employer, if you are going to use this mechanism, employees need to be made 100% aware that it is unlikely that they're going to receive their full remuneration. In fact, what the TERS regulation says is that they would pay an amount of 38 to 60% of the employee's income replacement rate. This sort of formula is extremely difficult to understand for those that love looking into legislation. You're welcome to go into the UIF legislation, and it's under Schedule 2. And there's a very complex formula that sets out how it is that the commissioner is going to determine the amount that will be paid to the employee. So the main message here, by the way, is communicate to your employee that you are going to use the system, the UIF system, accessing the TERS relief. And secondly, that payment is highly dependent on the Department of Labor. At the moment, if you think of it, there are thousands of people who are unemployed. And I'm sure that they will continue to grow. This population of unemployed people will continue to grow over the next coming months, even beyond the lockdown period, when businesses start to understand the true impact of COVID-19. So the payment that will be made by the Department of Labor, if it is in fact facilitated by the employer, will be made into an account that has been designated as being specifically for the TERS relief. And as mentioned, employees' expectations need to be managed in relation to timing of the payment, as well as the fact that it is unlikely that they are going to get 100% of the remuneration that they were initially paid. More importantly,
can I quickly interrupt you? Can you perhaps just try to switch your phone to airplane mode? There's a cracking sound on your voice. Just want to see if that can maybe.
Let's try that. Yeah.
Much better.
How's that?
Great.
Ooh, good thinking there. I had my timer going on. Oh, brilliant. Thank you, Marguerite. Excellent solution. Okay, so just on that point there, the TERS fund, or the Temporary Employee Relief, is only going to be in existence for a maximum of 3 months, and thereafter it will disappear. Of course, there would still be relief that would be offered under the Unemployment Insurance Fund. So any questions at that point, Marguerite, or should I move on to reduced pay?
I think you can move on for now.
Okay, brilliant. Okay, so the next scenario here is typically your temporary, so going back a step, generally your temporary layoff is for businesses that really can't survive paying employees, and especially bearing in mind they're not contributing to the income of that business at a particular time. Now, the reduced pay mechanism may be used for those individuals who are working from home, they're remote working, they might be an essential service, or there might be individuals who are only kept occupied by employer-related business for a few hours a day. Now, in this instance, an employer could potentially say to the employee, I'm going to pay you X amount of the amount of the income that you are used to being paid. That could be 50%, whatever it is that the business can actually afford. Now, even in these instances where you have a reduced pay arrangement, there is relief that is available, and this relief is available in terms of the Unemployment Insurance Fund Act. It's relief that's always existed, so I want to point out that this is not something that is new. However, it is something that I'm bringing to your attention because we often don't explore it, and now we are forced to do so. For those that are then able to claim under this, what you would claim for is the difference between the amount that your employer is paying you versus the amount that you would have paid had you been working the full hours with your employer. So that is the reduced pay mechanism that is available under the UIF. I'm going to pause there for a moment and see if there's any questions.
Okay, yes, we have one question here. Can employers with more than 50 mil turnover apply for TERS?
The answer is a resounding yes.
Right.
Okay, so the important thing to bear in mind here is that irrespective of the size of your business, you're going to be affected. Whether you're a 100 million business, whether you're a big multinational, it doesn't really matter. you're faced with tough choices, and you will make those tough choices, which might result in a temporary layoff of your staff. And that is why what the government is saying is, irrespective of your size, if you are going to close down your business for a particular period as a result of COVID-19, you have access to this relief. Okay.
Okay, thank you. Right, next question. For reduced pay, must the individual claim or can the company claim for them?
Okay, the answer is both can do it. I would, because of the type of information that's required, I would suggest maybe approaching the company, especially if the company will be assisting other employees with temporary layoffs. So there is the facility there to claim for the reduced pay. There's in fact a little code that one would use there. And as I mentioned, both parties may apply.
Right, any other questions? Whose responsibility is it to apply to the UIF for the non-paid hours?
Yes, okay. Okay, so I think I answered that question. The thing is, when it comes to this particular time where the employers are only able, or rather the circumstances we're faced is communication with the Department of Labor digitally. In the past, the employees used to go to the Department of Labor, hand in their forms, and they would be attended to there. But in the current times, if you don't have data, you don't have a laptop, etc., then I would say if you could ask your employer to assist you with this process, then that would be best case scenario. Alternatively, you can go online and do the submission on your own. However, you do require information from the employer.
Okay, great. Next question. Is the payment made to the employer and they must pay the employee?
Yes, okay, good question. Right, so what happens here is that where the employer applies in bulk for an employee or for a group of employees, they are supposed to open up a bank account that is specifically relating to the COVID-19 relief. What I mean is that in this instance, the employer would submit a whole lot of claims to the Department of Labor, including the employee details. It will indicate how much the employee gets paid. It will confirm that the business has been shut down as a direct result of COVID-19. It will also state there that it has opened up a bank account to only receive amounts relating to the COVID-19 relief. And what then happens is, once the department has assessed the claim and confirms that all information has been provided, it will transfer money across to the employer. It is the employer's responsibility to then transfer that money over to the employee within a set limit. I understand that set limit is within 5 days of receipt of it. Very importantly, there's strict rules regarding this bank account. You can't draw money out of it, etc. This money is effectively held in trust for the employees and is to be distributed solely to those employees.
All right, I think I'm going to take 2 more questions here. Right, so some people say that payment will only be done to the employer after the lockdown. Is this correct? Do you have any idea when we will, as the employers will receive?
Ooh, this is like looking into a crystal ball. Okay. Let's start off with what my feel is here, because my view on this is as follows, because there is no clarity. One is that TERS comes into play in April, and the government is in the position where it wants to make sure that people have money and they are able to continue with their life as close to what they used to in the past. They are, however, going to be overwhelmed by the amount of claims. My belief is that this won't happen after the 21-day period. My belief is that it should happen sooner. However, the challenge that employers are going to be faced is there's going to be a queue. In fact, there's going to be this massive queue. There are hundreds of people, thousands of individuals who are potentially even claiming. And if you think of it, the Department of Labor has never really been set up for digital work. So effectively, what we're going to find is we're going to find a massive backlog. And depending on how quickly they can clear that backlog, that would dictate how soon the money is going to enter into either the individual's account if they have claimed on their own, or the company's account if they have done so as a bulk. To answer your question, I don't think, I mean, this 21 days is going to go on for much longer in my view. That's why I was saying you need to have a plan B and plan C. But my suspicion is that they have and already are assessing claims.
Okay, there's a couple more questions here. Do you want me to go through them now, or do you want to stand over to the end?
Is it relating to these two?
Yes, it's still relating, yeah.
Okay, maybe we can take 2 questions and then we'll move on.
All right. Right, the maximum amount per employee that the UIF provides for.
Yeah, that's a bit of an interesting question. It's 17,120 rands. However, I want to caution people here. It does not mean that you're going to get 17,000, that amount at all. Because and I've been trying to really understand the UIF formula. All it says is that the person would be paid between 38 to 60% of according to an income replacement scale. Now I looked at the income replacement scale and it's almost like calculating personal income tax, because it takes into account a whole lot of factors. What I can tell you is that people who are earning lower will be paid higher amounts, so they're more likely to get to the income replacement of 60% of normal remuneration. And those that are higher are more likely to get towards the 38% of normal remuneration in terms of the income replacement scale. But the number of people who will hit that 17,000 at one go, in my view, will be low. So therefore, I would not say to people, you know what, if you're earning 30,000, you will get 17,000 back. That is unlikely because the income replacement scale does not work that way.
Okay, thank you. Right, next question. Documentation received raters fund states that it is applicable to companies with a turnover of less than 25 million. When was it raised to more than 50 million?
So this has always been the case. If I'm looking at the normal TERS bit, I'm not sure where that information is coming from. I do know that the small medium enterprises are more specifically targeting the other legislation, which is the postponement of the 20% taxes, the employment tax legislation, as well as the UIF. I mean, sorry, the reduced UIF.
Right. Okay, so there's 4 or 5 more questions, but if we have time left at the end, then we can quickly try and go through those.
Okay, perfect. Right. So then the next bit is the unpaid leave. And if I look, let me just move up one. Okay. So this is something which quite a few companies are doing at the moment. It is effectively employers saying to employees, go on leave, take your normal leave, but at some point this leave is going to run out, and the possibility is that the employers will then say, sorry, you need to then go on unpaid leave, and that leave of absence will be for a defined period of time. So what happens here is once the business reopens, the individual would then go back to their work. And once more, in terms of the old UIF, so not necessarily TERS or anything like this, you can actually put in a claim for the non-paid hours, subject to certain conditions, as of course. I've just got, okay, let's go to the permanent layoff now. Before we go to permanent layoff, we need to bear in mind there's a lot of relief that's out there. Laying off a person or a group of people permanently is a very big step. I do recognize, however, that some companies may be driven to this. And the first thing I do want to say is it's important to examine what other relief is out there. Things that you can consider, and these are bits that were released fairly in the last few days by the South African Revenue Service. That is specifically in relation to your small, medium enterprises. These are companies that have a turnover of 50 million. And what this relief is if a business with a turnover of less than 50 million is tax compliant, in other words, no taxes are outstanding or no returns are outstanding, then that business for the next 4 months can reduce their pay-as-you-earn liability that is usually payable, or that would have been payable to SARS, by 20%. Now, this relief is only available for a period of 4 months, which means the very first month that would be affected would be the month of April. So effectively, all it's doing is instead of paying 100% of the pay-as-you-earn that you have withheld from your employees and paying it over to SARS, you are in fact paying over 80% and using the remaining 20% for business continuity. And so that is one bit of relief just to keep your business up and running. I do, however, want to point out that it doesn't mean this 20% that you owe to SARS just disappears. What it means is that you then, after this 4-month period, need to pay that shortfall to SARS, but you get to pay it over a 6-month period. So in other words, the 6-month period that we're talking about is once the shutdown's over and once this 4-month period has disappeared, what you would pay would be those amounts that were due to SARS, however, spread over a period of 6 months. So for the period, yeah.
Okay. Your sound is again a bit cracky. I don't know if it's the phone or if it's...
it's both phones are off.
Okay, all right.
Let's just triple check. Yeah, this one's good. That one's good as well. Okay, so let's try that again. So to confirm postponement of pay-as-you-earn, 20% of it for a period of 4 months. Thereafter, you need to pay back that amount to SARS over a period of 6 months. For the period that you postponed your payment, i.e. the period of 4 months, SARS will not trigger any penalties or interest. So very important, SARS will not trigger penalties or interest for that 20% that is being underpaid. Of course, however, if you miss one of your installment agreements after that 4-month period lapses, then penalties and interest may apply from SARS. Okay. The second bit is the employment tax incentive. And the employment tax incentive, if you're claiming ETI, then you know what this legislation is all about. The ETI legislation was introduced by government a while back in order to promote the employment of individuals between the ages of 18 and 29, and thereby reduce unemployment in South Africa. And what was indicated at that stage is that if you are paying these employees less than 6,500, then you get a credit against your pay as you earn on a monthly basis, as recognition of the fact that you are assisting with the reduction of the unemployment in South Africa and you're playing your part. Now, the additional bit of relief that has been offered relates to an additional amount of 500 rands being provided to the employer on a monthly basis, as well as an increase in the applicable age. So in the past, that age, as I mentioned, was 18 to 29, but what the extended age is now 18 to, if I'm not mistaken, is 60 or 65, which all of a sudden widens this particular ambit. If you think of what the government is trying to do here, it's trying to protect those that are vulnerable, the ones that are most likely going to be the first bit of individuals that would be laid off. And the incentive here is just to say, hey, you can now claim these amounts, and you can claim it for a wider age group, as well as you can claim an additional amount of 500 rands for this limited period of 4 months. And hopefully this will then sway your mindset in trying to keep these guys on board as opposed to laying them off. The other bit of relief that was announced, and I haven't found the legislation as yet, this was something that was indicated by President Ramaphosa earlier on, is that there would be a reduced amount of UIF and SDL that would be payable by the companies. What sort of relief is this? I really don't know. I suspect it would be very low, because if you think of it, currently employers pay 1% UIF and employees pay 1% UIF. And the SDL payment is also 1%. So you're looking at a combined 3% of remuneration, up to specific limits that both the employer and employee pays for UIF, as well as what the employer pays for SDL. So that's an additional bit of relief that will be coming out. I just don't know when. However, when it does come out, I'm sure we will be able to share it on this particular two participants. Now, after all of this is taken into account, and bearing in mind the banks are also offering various types of relief in relation to payments, etc., I would say then you need to say, what can I do? Should I first try out a temporary layoff and then move to a permanent layoff, or should I just move on to a permanent layoff? If you do move on to a permanent layoff, then you would follow exactly the same procedure as the normal UIF procedure. And the normal forms would then be submittable to the Department of Labor. So I'm going to pause there before I move on to the next page.
Vedika, we have one question here relating to the deferral of the 20%.
Yes.
So the question is whether this deferral, the 20%, I wanted to make sure if the deferral is 20% on the total liability, including UIF and SDL. And can you perhaps just elaborate a bit on, you know, the difference between the UIF and the SDL and how that works?
Okay, so let's talk about that. Now, if you think of it, when you're making a payment to SARS, SARS is accepting 3 payments effectively. Payment number 1 is pay as you earn, that is due to the South African Revenue Service. Payment number 2 is the UIF contribution, which is due to the Department of Labor and the Unemployment Insurance Fund Commissioner. Payment number 3 is payment towards skills development levies, and that is one payment that is being used for ensuring that we are able to put enough money in developing individual skills. So the South African Revenue Service is acting as a collection agent for UIF and SDL. The particular legislation relating to the 20%, when I read it, it spoke specifically with regards to pay as you earn. And this is where I believe, and I stand under correction because I'm still waiting. I know that the bill has been released. The bill was released very late yesterday. and our initial investigations were based on the memorandum. So things are going about kind of backwards at the moment, because typically what would happen is the South African Revenue Service would prepare a bill. The bill will be open for comment for a long period of time. It would then, there would be changes made, and then it would go to Parliament for consideration and become an act. What has happened with this bit of legislation, because the government's having to move so quickly, is that they started off with a memorandum first. They started off with a memorandum, and a few days later, in fact last night, the bill was released. So I'll relook at the bill and see, but my view is that it should be just on the pay-as-you-earn. I stand under correction though.
Okay, thank you. One more question. Let's see here. Is there a maximum amount of time for a temporary layoff? Is it a category that only exists due to the COVID situation, or is it somewhere else in legislation as well?
No, so it isn't. So when you're looking at the TERS bit, the temporary employee relief, your business must be shut down as a direct result of COVID-19. And that's the specific wording. If it's not COVID-19 related, unfortunately, you can't fall within this.
Trigger. It's the trigger for TERS.
Yes.
Okay. One last question. If you are permanently, if you want to permanently lay off somebody, do you still have to pay notice and severance and go through all the other steps that you normally would?
Okay. So disclaimer here is I specialize in tax, although I do have a legal background. My view is that, or logic tells me that, look at what the contract of employment states, see what your own rules state. Your employees are probably already contributing to things like a retirement fund, etc. And laying off means that you need to consider what your own rules state and then follow those rules. Obviously, with the Basic Conditions of Employment, Basic Conditions of Employment Act in the back of your mind.
That is correct. I can confirm.
So maybe, oh, there we go, Marguerite. You should have answered that.
Okay. Right.
Maybe do you have anything to add there, perhaps?
No, you're perfectly right. You have to start with a contract, with the employment contract, but you have to also take into consideration the Basic Conditions of Employment Act, and you have to follow the processes set out in that legislation if you want to permanently lay off.
Okay. Right, so we're moving then on to unpaid sick leave. Now, here I want us to be able to let me take some time to describe what this is. Generally, when a person is sick, they stay away from work for a defined period of time. And initially, they will sort of use up, or they will be paid during the period that they are sick. And at some time, however, if they're sick for a longer period and they've exhausted their sick leave, you'd find that they don't get paid for sick leave. Now, in this particular time that we're faced with, sick leave is being used in different ways. For example, and this is particularly in relation to those individuals that are still employed, who are still earning money, etc., who become sick. You'd need to identify whether that illness or absence is COVID-19 related or non-COVID-19 related. Now, how would it be linked to COVID-19? So if you think of it in this way, what has everyone been saying, including the World Health Organization, is that COVID-19 has various symptoms. Some of these symptoms represent those of the flu. And what's been happening is there's been messages from the NICD, from everyone, saying that if you display flu-like symptoms, etc., rather stay at home and wait for a period of 14 days until the symptoms clear off. Alternatively, if you're really ill, just go to the hospital and you'll get tested, or go to a medical practitioner. And if they are able to do the test, then they will test you. But more often than not, any test results would come back a few days later or a few hours later. But as a general principle, what the medical practitioners would say is go home, rather self-isolate, and wait for your report. Now, in these instances, if the person is either self-isolated or self-quarantined without a medical certificate, or quarantines with a medical certificate for that period of 14 days or even longer, because sometimes if they do have, or let's say they do develop the COVID-19, they might be out of work for a long time because they end up being in ICU because they've got underlying conditions, etc. So the period that they are on this sick leave that is non-paid, one can also claim from the unemployment insurance fund. In this instance as well, there's a lot of documentation that's required, and the type of or the section that you'd be claiming under would be the illness benefit. The same thing with non-COVID-19 related illnesses. The affected employee would still have been able to claim under the UIF, under the illness benefit. The only difference, however, is that with the COVID-19, you've got instances where you don't even have a doctor's certificate, or you may not have the information necessary to have filed a normal illness benefit claim. So to conclude on it, in the case of unpaid sick leave, the ability is there to claim from the unemployment insurance fund. And in particular, around COVID-19, self-quarantines without medical advice and quarantines with medical advice are covered. Okay, so that's it on the unpaid sick leave. The next bit I find pretty interesting, because if you think about all the other aspects that I've talked about, they all relate to some sort of replacement in salary. So that is claims to the unemployment insurance fund, which would be, for example, with the temporary layoffs, claim for ETI via SARS, reduction in the 20% of employees' tax, that's also via SARS. But in the case of occupationally acquired COVID-19, what we're looking at here is rather the payment of medical assistance, okay? So what is this? The relevant legislation that we're talking about here is the COIDA Act, or the Compensation for Occupational Injuries and Diseases Act. Most employers would be more familiar with the term workman's compensation, okay? And typically workman's compensation is used when there's injury at the workplace. So if you are in a factory and your employee accidentally gets electrocuted or cuts off a finger, or let's say, for example, there is an emergency evacuation at your premises and an employee falls down the stairs, then what would happen is the employer would claim for workman's compensation. The fortunate thing about this particular legislation is that it also covers diseases. And when COVID-19 first broke out in South Africa, the main question that we had was, how do you get a link between the COVID-19 and or what is the link that you can draw between COVID-19 and the workplace? How do you actually show it? How do you actually prove it? And what had then happened is that a directive was issued, and the directive then sets out instances where there is an assumption that the COVID-19 was acquired due to the workplace. Some of these assumptions related or are as follows. One, the employee is working in a very high risk environment, and that could be, for example, in a hospital, in a lab, let's say a Lancet lab or an Unpaid lab, maybe even in the police service, the emergency medical service, etc. They are very high risk environments. Secondly, that the employee had direct contact with someone who tested positive in the workplace or at a meeting that the employee attended. The third bit is that the employee attended or went overseas on approved work business. And whilst he was overseas, he was in a high risk country and potentially would have derived that COVID-19 as a result of the travel to that high-risk country. So, for example, if they travel to Italy, they travel to the US, travel to China, etc., then those are all high-risk locations, and one could then draw a link back to the request from the employer to travel there for business purposes. And the final one is almost like a presumptive link that that you can draw an analogy based on the individual's almost employment actions that could say that the person may have got the COVID-19 as a result of an event or a seminar, etc. So a correlation between the timing of that seminar or event and the time that the individual actually tested positive for COVID-19. But why am I talking to you about all of this? It's because when an employee acquires a disease that is linked to the occupation, there is an obligation on the employer to report this to the Compensation Commissioner. And this obligation must be fulfilled within a period of 14 days. More importantly, though, for your employee, what it means is that if they don't, even if they had medical aid, what would be covered by the workman's compensation or the COED is transportation to and from the hospital or medical practitioner and back home. The reasonable medical costs, because now what you're faced with is repeated lab tests that need to happen. Often when you get to the hospital and you're coughing and they've done the COVID test, they're going to do chest x-rays. If you've got an underlying medical condition, you might get hospitalized, and here you might even end up in ICU for a long time. And in the unfortunate circumstance where it does happen is the person may even die. So what is covered is what is termed reasonable medical costs, such as what I have now described, as well as in the event of death, reasonable funeral costs. Very interestingly, because of the speed at which this legislation or this directive was created, the reference point was, in relation to death, was burial costs. It said reasonable burial costs and burial costs. And my question there was, if your religion says, or you want to be cremated, does it mean that that cost would not be taken into account? My view on this is that is just unfortunately an error in how the legislation was drafted, and any reasonable funeral expenses would be covered. The additional thing that would be covered here is what's termed widows and dependents pensions. In fact, there's specific forms that needs to be completed there by the employer, which would then allow the widow or dependent access to these pensions. And the reason, and that background sound that you heard, was just the notification that it's time for me to stop speaking so that there's more questions.
Right, so, okay, I've got a question here for you. What happens in the event that some staff continue working, let's say, for example, they're working in essential services. However, some of the staff, which are admin staff, are working at home. How would you deal then with the compensating the admin staff? Because obviously they might be on reduced hours. that are at home, that might not even work. So how do you deal with the two different options?
Okay, so I mean, essential staff, you would, if they're working the normal hours, I would argue that they would be entitled to normal pay unless they are working reduced hours. For individuals who are working at home, my guidance to any employer would be, are they set up to work efficiently at their homes? And do you have the level of trust to believe that when they are at home, they are actually working? Now, at EY, we obviously sell time, and we're used to having people complete timesheets. And we set out every little bit that we've done, even for point 1, which is 6 minutes. So we've got an easy way of tracking the time, but more importantly, our infrastructure allows us to work well from home. We've got a laptop, we've got 3G data. So if you don't have 3G, we're providing it to you. Quite a few of our staff at certain levels have a cell phone. They have their emails coming on cell phone. So it depends on the type of work that is done, as well as the infrastructure that you've set up. If you've set up your infrastructure properly and you have the trust in your employees, then I would say, based on what you think the work volume would be, then consider what sort of reduced pay you want to offer. In some instances, my view is that the only person who would know that would be the person to whom that employee reports to, because they would know what type of work is down the going down in that on that side, as well as that employee. I mean that individual would often then also check in to find out what work still needs to be done, what's outstanding, do you need help, etc. So for example, within EY, what we do is we have daily check-ins. So just as we're doing a call now, in the morning at 9:30 to 10:30, I reach out to everyone and I have a call like this. And we go through the work that is required, what is deliverable, whether people have capacity, etc. And that gives you a good idea, because on a daily basis, you are tracking what work there is and what the person is busy with. To just constantly phone and see if people are online, etc., that doesn't really work. So you have to have that level of trust, and you have to be truly connected to understand whether you need to go to a reduced option.
And if no work can take place at home,
okay,
now this, you deal with some of the stuff in a certain way, and you deal with others in another way.
So this is pretty interesting, because I had a call with a client earlier today, and they've got people who are, who are virtually call takers. And as a result of COVID-19, those call takers are no longer phoning people and trying to get in business. So what's happening there is they've told everyone to go home and they are not being paid. Okay, so it depends on the type of category of employee, as well as what your company can actually afford. At the end of the day, this is about preservation of your company, as well as, if possible, to make sure that your employee gets out of this with at least something. Sometimes businesses would look at their finances and go, crap, you know what? I really want to keep all my employees, but for me to stay afloat and be able to survive this, I have to temporarily lay them off. I can't afford to pay them because they're not adding to the business. But what this then does is when the business then reopens, it can reassess, because it now would have a good indication of what its financial situation would be. Worst thing would be is to dig yourself more into debt because you're paying employees that you can't afford to pay, just because your heart is telling you you need to do it. Whereas at the end of the day, you don't want to be in a position where your business is going to be liquidated because your heart was talking. And it's very difficult to differentiate between your heart and your brain. But at the end of the day, what I would suggest people do is do a plan, do a 21-day plan, do a 21-day plus 1 month plan, do a 21-day plus 2 months plan, and manage your employees' expectations. If you think that you are paying them now, but there is a chance that they may not be paid in in the next month, or in the next month, or the following month, prepare them for it. And that is the most important thing, is if employees know what's upcoming, then they can manage their spend patterns. So what I'm saying to people at the moment is, we're sitting at home, we're not spending our fuel money that I would normally spend, they save 1,600 rands a month on. Take that money, put it aside. So it's also around teaching them around finances. When you're sitting at home, don't troll the internet, because you're very tempted. You want to see, ooh, these places have a sale, this place has a sale, etc. Let me now order, and it will get delivered once COVID is over. So manage that. What I've also been saying to people is normal financial advice, which is, I re-looked at all my insurance products. And what I did was I said, holy crap, is that what I'm paying for my insurance? And I've been with the insurance company for X period of time. I actually phoned them and I said to them, look, I'm not happy with the premium that I'm paying. I'm thinking of moving to another insurance company. And if you think of it, now is the ideal time, because the risk for insurance companies is low. There's less cars on the road and more people at home, which means the chances of robbery, etc., are lower. So they are willing to offer much better rates. So I've been using that as a tactic, and I must say I save 400 rands per month now. I did that last week and went through my insurance, and on my way insurance, I managed to save 400 rands a month. And this is the advice I'm giving to everyone. Take the chance to bed down, look at what's going through your accounts, and spend wisely. And just try to stay at home and not get onto the internet and buy stuff, because you may not be able to do that going forward.
Difficult, but great advice. Right. Can we go through a couple more questions quickly?
Yeah, we can certainly do that.
All right. Right. If you're a small business and only have 2 permanent staff members, can you apply for some form of relief, even if the financial impact is not necessarily affected by COVID-19, but is severely impacted by the lockdown?
Okay, so that is dependent on facts, on a fact pattern. So number one is, you're a small business, so you're a small medium enterprise, you are fitting below the 50 million turnover. So what you could do is, if your business is impacted by COVID-19, but your staff not necessarily, or there's other business aspects that are being impacted, then the type of things that I would look at is potentially the reduction in PAYE, just to focus on perhaps getting your business to a point where once COVID-19 ends, you are in a better position to be able to build it up for an economy of scale, or to where you really dream it to be. So look at perhaps that 20% reduction and see how you can effectively channel that fund, those funds. Number two is, if you've got 2 employees in there, I don't know how much those employees get paid, but you could potentially look at the employment tax incentive relief. Number 3 is just double check that you are registered for everything. Because you can only access certain types of relief if you are registered. So registered as an employer with SARS, registered with the compensation commissioner for workmen's compensation, registered with the Department of Labor for UIF purposes. There's also a large number of banks that are being gracious in relation to repayment of loans, etc. And you might want to look into this. I am aware as well that with companies in particular, and I'm not a corporate tax specialist, but there is relief being offered in relation to your provisional tax payments. So a delay in your provisional tax payments is one aspect that one can consider. For your 2 employees who are potentially working remotely, you might want to, from a business perspective, say, how can you take advantage of certain aspects? For example, I'm sitting here at my home at the moment. I have Wi-Fi and I have a cell phone. And in order to make sure that I'm not putting undue pressure on the company, when I'm at home, I am using WhatsApp and using my data for calling. So instead of using the minutes that my company gives me, I'm rather optimizing using my data. So you might want to look at ways that you can reduce your expenses. So by saying to employees, if you've got Wi-Fi at home, please try and call me using WhatsApp. In your small businesses, if you're at home and you're working on your laptop, if you've got Wi-Fi at home, rather connect with your Wi-Fi. So these are simple ways of reducing expenses, because you never know how long this thing is going to take. Your business might be doing okay now, but give it a few months, you don't know whether it will still be doing okay. So some tips.
There are 4 more questions. I don't know how many time we still have left.
We've got 3 minutes.
Okay, right, quickly. If employers and employees have opted to use annual leave, can they still claim TERS?
No, that's paid leave.
Exactly.
Yeah, so that's an easy one. It's you're being paid during that leave period.
Yes, and then does the business have to be on a complete shutdown to claim from TERS?
Okay, so this is what it says. It says the business must have been shut down directly as a result of COVID-19. Now, my thoughts are that if you have divisions and certain divisions are shut down, then you can argue a portion of the business was shut down. For example, if you were in the manufacturing sector and you were, whatever it is, you were manufacturing, let's say you were in the motor industry and manufacturing cars, I would argue that that particular manufacturing was shut down for a specific period of time directly as a result of COVID-19. And that argument could then be warranted. I mean, looking at the wording, it says the business must be shut down. But I think that you can show that a portion of the business was shut down because that is the intention behind this. The intention is that people are no longer able to be at work because of the lockdown and the social distancing measures that are in place.
Thank you. Right, last one. Do you know of any relief being offered for companies over 50 million besides TERS?
At the moment, I would not, I'm not aware of any. I would say that possibly in the corporate tax side of things, there may be. The focus, though, at the moment is on your small, medium enterprises because they're the ones that are likely to feel the impact first because of the low amount of cash that they generally have that is freely available. Your larger businesses tend to have sufficient cash in the bank normally. But once more, that's just a generalization. But I believe that the government specifically focused on SMEs because they're the ones that are likely to feel the impact worst initially. I suspect, however, that as we progress, there will be more and more legislation that comes out. I don't know what that would be. In Kenya, for example, there was a drop in the corporate tax rate. There was a drop in the VAT rate. There was a drop in the individual income tax rate. So they went really, really big there. I would not rule out the fact that, or the possibility that we may need to reach those, or the government may need to take steps such as those in the days going forward, if the period of lockdown is increased.
Okay. There are a couple more questions coming in. Jean, I don't know if you want to maybe just, your mute. Let's just unmute. Unmute.
Apologies. Yes, I think we can carry on for a few minutes to cover some of the questions if the two of you don't mind. You've done an excellent job. Thank you so much.
Sure. Okay. Can we please get a copy of the slides and the Q&A afterwards? This was very informative.
Okay, we will do that. Just as a matter of interest, there will be more articles that we'll be releasing. We tend to focus on more of the practical side as opposed to just going into the legislation. The one thing that I want to point out as well is that where possible, we try and wait for the legislation to be released before sending out any commentary, because we've just found by looking at what's been happening in the media is articles are being drafted on the basis of what the government is saying, but when you look at what legislation comes out, it's something that's totally different. So I'll make sure that, Jean, if you could send me the details of the participants, we'll link them up to our media articles that are specifically relating to tax relief and other relief, either specifically to COVID-19 or other aspects that businesses need to consider.
No problem, we can do that.
Okay.
All right. Can we use a combination approach to employees who are forced to stay at home and unable to work from home? So you've got a couple of people staying at home, they cannot work from home. For some, you want to maybe pay something, for others you don't. Is it allowable?
Okay, so this is exactly the sort of questions that I was asked earlier today by another company. And yes, you can vary your approach depending on how much use the individual is at the time when this lockdown is occurring. So you could say for one category of people that, sorry, I won't be paying you, but your job is there and we're going to claim UIF for you. And to the other category to say, hey, I will continue paying you, but just bear in mind, if this does if the work starts to reduce, we might need to enter into other arrangements. That is permissible. Of course, if you are in a unionized environment, that may not hold true, because unionized employees are treated completely different. You'd need to deal with bargaining councils, etc. But assuming that we're talking about non-unionized individuals, then my view is that you need to effectively put employees into buckets. And depending on what bucket they fit into, you may vary your approach to compensating them.
Okay, great. Let me just see if there's anything else. That's done, that's done, that's done. That's done.
Brilliant.
Awesome. Thank you, ladies. That was amazing. We had a really good audience. Thank you so much. There's a lot of information that you covered there. It's a very difficult subject. So thank you to everybody who joined us. I see some of the people have already started dropping off. We will be sending a copy of the recording to anybody who registered for the webinar. And we'll include the slides with us as well. And maybe we'll look back on some of this and see if there's any questions that we skipped. We could put that in the email as well. So thanks so much to everybody. Marguerite, thank you so much for stepping in. Marguerite has an amazing legal firm based out of Cape Town. please look out for them, and they're on the website, www.greefattorneys.co.za, right?
That's correct. Thank you.
Okay. And Vedika is a partner at EY Africa and in the People Advisory Services. So we really thank you both for coming on board to help us unravel this big topic. And to everybody who joined, thank you so much. We'll see you on the next webinar. Thank you, ladies.
Thank you. Bye, guys.
Bye.
Bye.